Good evening to everyone. My name is Gaurav, and we'll be starting with today's webinar. The topic for the webinar today is about crude oil. We are going to discuss a lot about crude oil, right from the basic to detail as to what is crude oil, what are the components, what are the producing countries. There, we are going to talk about a specific event called crude oil inventories, right? This is a data that comes out on every Wednesday. Now, this keeps changing based on certain factors, and that is mostly decided by investing.com board. That sometimes you may have the crude oil inventories coming out on a Wednesday, or this could be on a Thursday. So, this could be checked on the economic calendar. So, right now, we are going to look at MT4 as to begin with. One second. So, before we continue, I do want to notify you. My name is Gaurav Saini. I'm a part of MTrading for the last 3+ years, and we've been giving information through our webinars uh, to our clients. So, majority of our clients today who have joined from our IBs are mostly new clients who don't have much info about trading. So, this is going to be a learning session for them also. Now, this webinar was originally going to be conducted by Mr. Rajiv, but because of some emergencies, he is not going to be available today. So that is why I'm going to be a part of this session. Now, when we talk about crude oil, now the word crude here, if you guys Google it out, the word crude means something that is basic or something in its original or natural form. So the word crude oil here means oil that is in its purest or its most natural form. So meanwhile, while I'm speaking to you, guys can go ahead and Google and type the word crude and try to understand the meaning. So crude, like I said, is the basic or natural form of oil that is extracted. You know, so a lot. This is something that need not be explained by me because everyone out here knows that the Middle Eastern part of the world, which is countries like UAE, Qatar, Oman, Kuwait, all these countries have been have gone from being not so economically rich to becoming very economically rich countries only because of the production of oil that is available, the reserves of oil that are available in these countries, right? So when I talk about crude oil, this is oil that is extracted from the core of the earth or from a lot of other places that is in its natural form. That is what is called crude oil. Now, when we further process this crude oil, you get byproducts like petrol, diesel, a lot of other byproducts that are extracted by processing crude oil, right? Now, there is a body that is called OPEC, which is spelled as OPEC. So right now, you guys can go to Google. I am opening my Google page also. So you can just type in OPEC and you would see OPEC. It has a symbol and it says Intergovernmental Organization, right? Now, this OPEC stands for the Organization of Petroleum Exporting Countries, right? So we're going to go in detail as to what are these countries, what are the countries that are a part of this body, right? So member countries is what I go to. OPEC member countries, if I search, I'll be able to see this entire list as to what are the countries that are a part of this body, right? So these would be countries who are into higher production of oil. So this includes uh, countries like Iran, Iraq, Kuwait, Saudi Arabia, Venezuela, Qatar, Indonesia, Libya, the UAE, Algeria, Nigeria, Ecuador, Gabon, Angola. So these are some countries that are part of this OPEC body, and this body is primarily responsible for controlling the prices, or rather, let's say this body is responsible for controlling the demand and supply of oil. Right? When there is a control on the demand and supply, this automatically creates a control on the prices because the demand and the supply decides the prices of a specific commodity or an instrument, right? Now, I always had this question when I was new to this industry that, uh, if you guys were attentive and you were listening, I said Nigeria is also a part of OPEC, which means Nigeria also has a lot of oil reserves, right? So that's supposed to mean that Nigeria has to be economically rich and financially strong, but that did not happen because there was not a proper management on the oil production in Nigeria as a country, right? So that is one of the reasons why, even after having a lot of reserves of oil, Nigeria is still not, up to the mark, or when you compare it to other countries like UAE, or other countries that are a part of the OPEC. Right. Now, if I go to Google and I search which are the which are the major contributors, which countries are major contributors of oil. If I search that, I want you guys to also search this, and you will see that US, Saudi Arabia, and Russia are the three countries that are the major suppliers or producers of oil, right? I hope all of you are able to hear me. Now, if I go to the MT4 platform and if I see the price for oil, how it has been fluctuating, how it has been changing, right? I'm going to also, meanwhile, move to the graph for oil, because for us to understand how oil prices have been moving over the past, if we look at that, it's going to be very, very easy for us to analyze what factors have been impacting oil prices. So one of the major, I've been in this industry for the last 5+ years, and one of the biggest movements that I have been shocked to look at, right? I'm going to share that experience of mine, which has been, something that I'm not sure if I'm able to experience in the future, because I, as a market analyst, have seen oil prices dip down to as low as $5. An instrument, a commodity, oil is something that is a requisite for us day in and day out for everyone today, right? Now I have seen this instrument move to a price of as low as a $5. Right now the instrument stands at a price of $85 per barrel. COVID, when during the December 2019 is where COVID actually started in China, and as long as it was content in China, it was constrained to China as a country. Things were not that bad, but slowly and gradually, as COVID, this virus, and a lot of patients started moving to other countries. COVID was very soon, by the month of February, by the month of March, COVID was announced as a pandemic by the World Health Organization. Oil prices before that were still stable, where prices were dipping because it was a very logical movement. Everyone knew that oil prices are going to move down if there is going to be a lockdown. The demand for oil is going to go down. If there is no demand, people were starting to sell oil, is why the oil prices had been moving down. Now the markets closed. This was at the end of the month of March. The markets closed on a Friday, right, at a specific price, and on Monday, when the markets opened for oil, the markets opened with a gap of a negative of $13, 13 $13, which is a big, big move for oil in its entire history, right? So I have seen clients who had as low as a 10,000 barrels on a sell position on oil, because that was evident to everyone that oil prices are going to dip down if there is going to be a lockdown, if corona as a virus is going to be hugely impacting. So on Friday the markets closed, and I had clients who had sell position with as high as a quantity of 10,000 barrels, right? I remember one of these clients who had a sell position of 10,000 barrels on oil. On Friday, he opened the position. On Monday, the markets opened with a gap of $13. His profit on that movement was 13 into 10,000, which is $130,000 of profit on one move, right? I'm still in contact with that client, and that client is now not trading on oil because that was the only position where we could, sell oil. But as soon as the oil prices kept dipping down and the markets were at a price of back to $5, from there traders started buying oil, right? Because it is an international commodity, is an important commodity, right? things were into a lockdown, but they were not going to be in a lockdown permanently, right? So as soon as there was an news for the vaccine that was announced, as soon as the airline industry started picking up pace, as soon as the transportation industry started picking up pace, the prices for oil started moving up back up. Now these were the same traders who had made money when the oil was falling down, and these were the same traders who were now buying oil because they knew that the demand is now rising, everything is getting back to normal, and the prices are slowly and gradually going to move up, right? So these are the traders who again made money on the buy position on oil. And I'm talking about a phase from September 2020 right up till February 2021 is where oil prices consistently, if you pull up the graph, you'll be able to see that very clearly. Another impact that was created on oil was because of the Ukraine Russia situation. Now, when we googled out as to what are the major contributors of oil, Russia is one of them, right? Now when there was a Ukraine Russia situation, US had planned to, or had announced that it would be putting up some restrictions on, buying or supplying oil by Russia. So it had warned, US had warned other countries that they should not be uh, contacting or using oil that is supplied by Russia. So because of that, that created an impact. If Russia, which is a major contributor, moves out from the supply of oil, that created this sentiment that now if there is a lesser supply, oil prices might, move up. Lesser supply and the demand remains same, the prices automatically move up. So that is one reason why you would see during the month of uh, around the month of Feb 2022, Feb March, when all these things with the Ukraine Russia started, you would see some upside movement with oil prices in that phase. That is one of the sentiments. So oil is more like a political instrument. A lot of my experienced traders tell me that oil is now more like a political instrument that is controlled by majorly the OPEC countries, right? Now you could also use the moving average with when you are making analysis, when you're trying to understand which direction the market may move in. One of the technical indicators that really helps you understand the movement of the instrument is either Bollinger Bands or moving averages. So these are two instruments that are very helpful with oil, right? So now coming back to crude oil inventories, and before we move to crude oil inventories, like I said, airline industry is a major factor that impacts the pricing of oil also. If there is a sudden change in the demand for the airline industry, or because of some some stock that is moving up. So I'll give you an example, a very simple thing. Let's assume that oil prices right now are at a price of $50, right? Because of some news, the prices move up to from 50, they move up to $55, let's say in a week's time. Now, because of this, the oil prices getting higher, you may expect the stocks for the airline industries and transportation industries to comparatively dip down because oil is one of their primary needs, right? One of their primary expenses when they're doing their accounts, right? I mean, imagine the amount of fuel that is required for an airline industry in one quarter, right? If the prices are comparatively higher for oil, you may expect their profit margins to dip down. That brings about a sentiment among traders that the prices may dip down for these stocks, right? Because that is a negative news for the airline industry. So because of this, you may go for a small sell position on these stocks also. On the other side, when oil prices are low, you may expect these stocks to comparatively go up on the higher side. Now, looking at the economic calendar, when you go to the economic calendar and you look at a Wednesday or a Thursday, you will find the crude oil inventory is mentioned there. So when this report comes out, this is basically a comparative report, and that comes out every week. So this gives us an idea as to what is the supply or what is the inventory of oil that is available. Now, because of this change in the inventory, if the inventory is higher in number than the last week, which brings a positive note that there is good supply available, there is good inventory available. So the prices may comparatively dip down, right? If the inventory has dipped down, now the inventory is decided by the supply and demand. The inventory on this week, on Wednesday, may change in number till the next Wednesday based on the supply and demand of oil, right? It is possible that one country supplies a major chunk of oil in one week. In the next week, there's another country who's not able to supply that amount of oil based on a lot of factors. So because of this supply and demand, the inventory number changes. If the inventory number as per the last week is gone down, is lesser in capacity or is lesser in availability, the simple logic here is there is lesser inventory, the prices may move up. So I have a lot of traders who keep a close eye on the inventories and automatically, and they have an understanding. For this, you will need to follow the crude oil inventories every week, at least for the next 4 or 5 events, for next 4 or 5 Wednesdays. That is when you will understand that how a specific inventory number impacts the oil prices. Now, oil is one of the instruments which can be traded with a very low margin. To be very frank, low margin does not mean that I trade with like $10 or $20. It is also important for you to have a sufficient backup in your account when you're trading with oil. Let's say I'm trading with 1,000 barrels. The oil is an instrument that can move up or down in one day, maybe in a range of $3 to $4 also in worst case scenarios, right? Or in best case scenarios. So if the price is moving $3 or $4 against you, it is important for you to have that kind of backup also, right? So for example, if I open a quantity of 1,000 units, my required margin, if you check with MTrading, since we have a very good leverage that is available, may not be your required margin may not be above maybe a $50 or $60. So if I'm opening a trade with using $50 or $60, 1,000 barrels, if the market goes in my favor even by 1 point or by $1, I make $1,000 of profit then and there, right? So there are traders who trade only on a Wednesday, only on oil, and they make some good amount of profits through these, you know, through this instrument. So we will keep looking at the crude oil inventory data every week now, and we'll try to share information about how the inventory has impacted oil prices on a specific week. For this, this is not something that I could train you on in one session. This is something that a client needs to be passionately following, trying to follow, trying to dig in, trying to understand how crude oil moves, what is the impact. Because this is an instrument which can be traded with very less margin and some good amount of profits can be made. So, like I said, there are clients who made a profit of almost $130,000 on oil in one day on crude oil when the market had crashed in March of 2020. So now we're going to move to the question and answer session. So I have some questions about oil here. I'm going to dig and try and understand which of these questions are something that may be helpful to everyone. So I see one of the questions which says that what is the capital that I may require to trade on oil as one of our visitors. So like I said, your capital completely depends upon the used margin that you decide to put in. My capital. For example, if my if let's say if I have $1,000 in my trading account and I'm using, let's say, only a $5 or a $10 or maybe a $15 to trade, that means that I'm trading with a much higher backup, which means my trading or my risk appetite is much lesser, or my risk percentage is much lesser. Against that, let's say I have $1,000 and I've utilized $900 to trade, I may open up a big quantity using that amount, but imagine even if the market moves against you by a small percentage, your account is at stake, right? So it's important for you to kind of calculate and decide. So the best thing to do is use maybe 10% or 15% of your capital to open your positions, and keep 85% as backup. So even if there's a small dip, which is a temporary move against you on any of the instruments, you'd be able to sustain those trades. So sustaining is one of the key ingredients in this business for you to see success. If you're able to sustain, there's nothing that can stop you to make money in this business. So I see another question which says, I want to learn about oil trading. The best thing to do is keep following, keep looking for information. Now, if you go to investing.com, this is one. Now, investing.com is a very good website, no doubt about it. But I don't want you to go into the articles, that this has come in, there is a news, there is dollar has moved up, a dollar has moved down. Those are articles that tell you that what has happened in the market. That may not be really helpful for you to analyze or predict the next move, right? So most of the times, I'm not trying to blame everyone, but with investing.com, based on a certain movement, investing.com tries to create an article that why this movement happened, which may not be the real reason, because no one knows why a specific instrument moved up. It could be some X reason. There may be some big fish that came in and bought some of the stocks. That could be one of the reason that triggered an upside movement. That is also possible. So the best thing to do is keep looking for information, not just on investing.com but on other websites. Try to understand what oil is. what are the organizing, what are the countries that are involved, look for a like the they look for an opportunity like the Ukraine Russia situation, right? So these are opportunities that you need to be utilizing. When it comes to oil, you might not get that kind of opportunity every day. Like I said, the COVID price may not come back. I don't see a reason why those prices should be coming back in the next 5 or 10 years. A price like $5, I have traders who utilize who maxed out their credit cards to buy oil from those levels. I've seen clients sell their houses to buy oil from those levels. But trust me, these are clients who now have more than 5 or 6 houses that are available based on the profits that they made from that move. Imagine you buying even a 2,000 quantity or 2,000 barrels of oil from a price of five, and now the price is, let's say, you wait till a movement where the move price reaches 55. So that's a movement of 50 points. 50 points into 2,000 barrels gives you a profit of straight $100,000, right? That's the power of oil. And this movement from 5 to 55 was completed in a span of 3 to 4 months of time. So that's the magic of oil, and that's the best example that it could I could give as to how traders could make a lot of money in this business. Also, the hindsight or the other side of the business is also very risky. But yes, if you manage risk, there is nothing that can stop you from making money in this business. So that's it for today's session. We would be having more of if you guys have any questions, you can just go to our webinar that will be posted live, or, I mean, which is a recorded version on YouTube, on our YouTube channel, which is MTrading. And out there you can put in your comments as questions, or the best way to reach us on an immediate basis is just connect with our relationship manager, or you could just drop down, or you could just send an email to our MTrading support. That's the best way for us to kind of get back to you if you're interested to know more about oil, or to know more about the analysis on a specific day on oil. So that's it for today's session. And the next session that we have is on the 14th of September, which is about gold. And the timing remains the same from 5 p.m. to 6 p.m. IST. And I'm going to be the speakers for this session on the 14th of September. So that's it for today's session. We'll be getting in touch with you on the 14th, and we'll be waiting for all your questions and responses for this session today. So thank you so much for your time, guys. Everyone, have a great day. Bye bye.